Hello and welcome back, traders. Dylan Del Rosso here, co-founder of PeakBot, joined by my co-founder and trusty Steve, Ben. We are back for another week of trading, another short week of trading, which, as I would call myself a trader now, I'm realizing the beginning of the year has a lot. I guess the end and the beginning of the calendar year.
Doesn't always happen. It just happened that the holidays kind of lined up on Mondays.
That's true. That's true. We have had what feels like more short weeks than full weeks in the last 2 months.
Honestly, in the last month, I think that's an accurate statement.
Yeah. So we're back. Excited to go through everything here. For new listeners, we are the co-founders of PeakBot, an automated trading software built for the everyday person. We take well-known low-risk trading strategies and we automate them for the everyday trader. And we make it easy, affordable, and transparent. But we're here today to cover everything from exploration to automation. I think that's our saying. I might have it backwards.
That's our tagline. No, I think you got it.
Okay, so we're here to cover everything. Of course, our regular scheduled agenda is typically I'll be handing this over to Ben to review a couple stock charts. These stocks will be pulled from our watch list. We will then, of course, answer any questions that we have along the way. Don't hesitate to reach out, put it in the comments. Whether you're viewing us on Twitter or YouTube, feel free to comment. We're happy to look at any charts that you might want to check out. We are happy to answer really anything you got. We got nothing to hide here. So, and then we'll take a look at my portfolio and make some changes for this week. And we'll go from there. I'm sure we'll touch on a couple other things, but I know we have a new update to our watch list that Ben will share in just a minute, which is very exciting. So, Ben, without further ado, I'll hand it off to you and let's get into it.
Yeah, let's do it. And to Dylan's point, we're on YouTube and Twitter right now. It would really help us out and Tradier out if you could like this video, share this video, get more eyeballs here. We're doing some pretty cool stuff in the world of trading. So I'm going to pull up my watch list, or the PeakBot watch list, not just my watch list right now. And we're going to talk through some of the headers just as a refresher, as well as our new column in here, the risk level, and talk a little bit about how we got there. So first of all, again, for anybody just tuning in, we are automating the wheel strategy. And this watch list is put together specifically for the wheel strategy. Now, PeakBot puts a little twist on it. We give the option of having a hedged version or an unhedged version. So the unhedged version is the traditional wheel strategy where you're selling cash secured puts. And then when you get assigned, you then go ahead, flip that, start selling covered calls. And then once those shares got called away, you would just rinse and repeat that whole cycle. It's that cycle. It's that wheel. That's why we call it the wheel strategy. Now, the twist that we put on it is a little bit of added protection. We're actually selling vertical credit spreads. So when we first start a position, if we don't own any shares, we'll be selling put credit spreads. And that gives us a maximum loss that minimizes our risk, minimizes our downside, protects us from unforeseen market volatility. So I know I personally always trade with the hedge on. I'm always trading with the spreads. Dylan, I know you are too. We've got some crazy people that like to trade unhedged, but more power to them. So as we're looking at this watch list, these numbers will directly correlate with the vertical wheel, as we call it, the vertical wheel strategy. Starting off, just so we can understand what this graph means here, we've got our company, we've got the ticker, the estimated cash needed. So this is the cash needed in your account, in your brokerage account, not in your PeakBot account, but in your brokerage account, in the case that you were assigned shares. Actually, one more important detail I forgot to mention is this is all in the context of weekly options. So getting into a position, opening a position on a Monday, and then letting that position expire on Friday.
Or Tuesday if the market's closed.
Or Tuesday, like today's Tuesday. Yesterday the market was closed, so we're going to get in on a Tuesday. Shorter week, a little bit less premiums, but we'll get into that in a little bit. So the estimated cash needed is the cash that you need in your account if you were to be assigned shares at expiration. Now, the estimated max loss is essentially the distance of your spread. multiplied by 100. So we're also assuming one contract here. So I know that if I'm trading Marathon this week, my estimated max loss is $250. And then my estimated premium on that is $52. So if we take this 52 and we divide it into, or divide the estimated cash needed into it, we get about a 3% return on cash needed. So that's basically me saying to Dillon, like, hey, Dillon, if you just keep $1,750 in your brokerage account right now and you trade, these strikes, and the strike detail is on a different part of this page, but if you trade these strikes this week, you're going to earn like $52. And that's going to be a 3% return on your money in a week. So that's pretty good. Now there are risks. Of course, we know the max loss. We won't get too detailed into that just yet. But we have this additional information box over here. We include stock price, of course. We've got estimated earnings date, which we are quickly approaching earnings season here. And as we all know, trading during earnings season is a bit riskier. So just a word of caution, when you are making trades during earnings season, might be a good idea to figure out when your companies that you're trading are reporting, because of course there's typically unforeseen volatility in either direction, really, at earnings. So makes it tougher to play. Now, if you're trading like straddles or strangles or something like that, then you want higher volatility. You want huge moves in a certain direction. For us, the more stationary the stock price stays, the better, right? We're working on time decay here.
And Ben, really quick, if you don't mind me adding, I know we're jumping around a little bit, but just since you're mentioning the earnings report, it's important to note that Alcoa Corp, as you can see highlighted, stock AA, we highlight that stock for you to tell you that they have an upcoming earnings report either this week or in the next 10 days. So you can see that's tomorrow. Alcoa Corp is reporting earnings tomorrow. We're not saying don't trade it, but what we want to tell you, we want to tell you, hey, this is probably a bit more volatile than it is normally because of the earnings report. Stocks typically do this or this, and we want you to know about that. So that's why we highlight that. Go ahead. And we do have a question, Bill. We're going to get to you in just a second here.
Yep. A recent addition to this watch list is the trend. So the trend direction. We're basically just showing an estimate for bullish, neutral, or bearish. If I scroll down here, we'll see some bearish tickers. The way that we're calculating that is we're looking at the 67-day EMA. Why the 67-day EMA? Well, that's pretty much 3 months worth of trading days. And we feel that gives a pretty solid indication of stock direction, at least in the short term, right? Because we're really only concerned about the next week. So the way that we determine bullish, neutral, or bearish is if 2 of the last 3 days and 6 of the last 10 days are trending up in regards to the 67-day EMA, that's bullish. The exact opposite is bearish. If the EMA is trending down 2 of the last 3 days and 6 of the last 10 days, we consider that bearish. If it's neither of those, then we consider it neutral. Now, the new addition to the watch list is this risk level. And Dillon, feel free to add color here, but we felt it necessary to add risk level to our watch list because what people were doing and what we were seeing in the data that we were getting back from our automated platform is people are typically trading the top of this watch list. And people typically don't really know what these companies do, or they might not really be comfortable holding these companies long-term in the case of assignment. And something that Dillon and I always like to tell people is you've got to do your own research, 1, but 2, you should like the company that you're trading just in case you get assigned those shares, because then you're going to become an owner of that company. And typically you only want to own things that you like, right? So for those that we don't have a chance to talk to, like they're not getting that messaging. So we wanted to throw in a risk level just to raise awareness, like, hey, yes, you could earn quite a nice return on your cash needed, but the risk is pretty high here. And that's risk that the stock price could drop more quickly than anticipated. risk of assignment. You know, the stock market's like the Wild West. You don't really know what's going to happen. You can take an educated guess, but so we added in this risk level, and this risk is it's a simple math equation. If you scroll to the right of this watch list, we give you what the equation is. So the risk level is calculated by dividing the stock price into the estimated maximum loss. The higher the number, the more perceived risk. So we're not showing a number here because that would be hard to interpret what that means. So we've set thresholds as to what, you know, constitutes very high, what constitutes high. We could scroll down here. We've got some moderate, and then we scroll further towards the middle of this list. We have lower risk. And I know that for me, at least moving forward, I'm going to be looking for these stocks that are either bullish or neutral and have lower risk, like AMD, for example. Our outlook this week looks pretty good. It looks like we're in a bullish trend, and it looks like we're looking at a bit of a lower risk opportunity here. It's a bit more expensive. You're going to need $14,000 in your account to actually pull this trade off. But for those that have that, great option. We got Roblox down here, bullish, lower, and then we also have Delta Airlines, which we're going to be pulling up that chart in a little bit, bullish and lower. So while these might only be paying out 0.5%, in this week, compound that over the course of a year, 0.5% a week is 26%. So that's awesome. That's still great.
Yep.
So I want to get to Bill's comments here. He's posting in our YouTube channel. So Bill says, I got assigned all my positions last couple of weeks. 2 questions. The app says only one position is hedging off. All others say hedging on still. Is this an issue with the app? Bill, I would say for that, contact, when you log into PeakBot, there's the chat icon down at the bottom right. I think if you contact us through that chat icon, we could help you out there. I would need to actually look at your account and see what you were looking at. I will say that the hedge, whatever you set it to, it's not going to change on or off unless you change it yourself.
And you have the ability to edit it. If you look within your automated portfolio and click on the stock that you're referring to or the stocks, you can either check the box and hit edit status, or you can just click on the word active. And I think actually clicking on the word active is a bit easier for you. How about, you know what, I can share my screen quickly.
Well, Dylan, you're going to pull up your account in just a bit. So why don't we wait until you pull up your account, and then we'll show how to edit stocks. But Bill had another question here. So one of the positions is Rivian, which is no longer on the watch list. Understanding this is not financial advice, would you say sell this position and remove it from the app as well? Again, not financial advice. The reason that it's off the watch list now is likely because it's paying a lower premium this week. So we have an automatic filter on here whereby if the estimated net premium isn't at least $10, and we choose $10 because there's costs associated with selling options, right? There's the broker fees. There could be assignment fees depending on what broker you're trading with. So when considering that, as well as the capital that you put at stake to actually make the trade, we want to make sure that the juice is actually worth the squeeze for you, right? Because if you're trading a stock and you're only getting like $4 in premium, you're going to be paying out, call it on average like $1.50 to $2 back just in commissions on some platforms. You're going to be left with $2, and then what are you risking to earn that $2, right? And then that $2 gain is taxed in your taxes, and you're really only making $1.50 out of that. So there's all of these different considerations that come into play. So that's what we do. We filter out anything paying low net premiums. We also filter out on the hedge watch list, which is what we're on here, any stocks that are priced lower than $10. Every once in a while, one might squeak through if there's a price change in the middle of the day that drops a stock below $10. But if we're looking at the stock price column here, we're not seeing anything below $10. So if we look at the unhedged watch list, I believe that Rivian should show up here. Give me 1 second. My
while you're doing that, while you're doing that, Ben, just for some context here, Bill, it's a good question. I had a stock, and we'll look at it in a little bit. GPS, I think that's Gap. So I had it last week. I got assigned, and it's not on the watch list anymore for the hedged version of the wheel. And it's for good reason. It's not on the watch list. It's either not paying a good enough premium, or it's fallen under our price line. So I am doing what you said for my account personally. I'm selling those shares manually this morning, and I'm going to reallocate that cash to a different contract. And now Ben, just so you know, and now Ben has this pulled up here.
Yeah, so I'm on the unhedged watch list. So this means that we're just selling a put or just selling a call. We're not selling a spread here. So when we do sell a spread, we're giving back some of our premium for that. We'll call it insurance policy, right? To provide us with that max loss. And on the call side, it's not actually an insurance policy. We're actually earning more premium because we're selling the 50 delta, but we're allowing ourselves to participate in the upside, which anybody who's traded Sunrun or Riot in the past month with us, we saw some pretty nice gains on those bot calls. So just to double down on Dillon's comment, for me personally, if I've got assigned shares and that stock isn't really paying out high premiums anymore, like what I like to do is I like to take a look at how much cash would I have back in my account. So I'm just making the assumption here that if I were to sell all of my Rivian shares, I would have about $1,700 left in my account. So then I'm going to say, okay, well, I can take my money out of that low yielding investment and repurpose it somewhere else. Where can I look? Now, if I'm on the watch list here, I'm going to want to find something right around that $1,700 range. Now, Marathon's at the top. I'm going to avoid that one for now, just due to risk level. But if I scroll down, I'm looking at Carnival here, still a bit of a high risk. I'm looking at, let's find a lower risk stock.
That's not in an earnings report. You got to scroll down pretty good.
Yeah, UiPath, ticker PATH, is around that price level. Bullish, a little bit higher risk. I guess we got to go far. Those lower dollar value stocks are the riskier ones. So the point being, maybe Macy's. Macy's is a company people are familiar with. We're in a bullish trend, still a little bit higher risk, but that's around the dollar value we're trading. So that's what I would do. I would just look to repurpose that in a position that's going to yield a higher return on that particular week.
Couple quick comments. The mentality here, and you guys can probably tell the difference. Ben's more of the technical trader. I'm more of the layman who's figuring this out along the way, right? When you're in a loss, if you get assigned shares and you have an unrealized loss in your account, understood. You guys are the best. Have a great day. Bill, you're the best. But we appreciate you. So when you're in a loss, okay, your mentality, at least my mentality, and Ben can correct me if he thinks otherwise here, but the loss has happened. That's the past now. Now we have a hole to dig out of. Where are we most confident that we can dig out of this hole? Is it on this same stock by selling a call and collecting a slightly higher premium because we still believe in that stock and it just had a bad week? Or do we cut our losses and say, like we've been saying, let's go to another contract? Where do you feel most comfortable collecting your rent, right? That's how I think about this. The loss has already happened. If you think the stock is still in a good position and you feel good about it in the long term and you're comfortable owning those shares for however long you might own them, then let it roll. But if it's not, cut your losses, sell the shares manually in your broker account, and go find a new home for that capital. And because you're collecting rent either way, whether it's there or somewhere else. So if you'd rather not own the shares, make the change. Remove it from your watch list. Remove it from your portfolio on PeakBot, which couldn't be easier to do. And I'll show you guys that later. And go from there. And so the other thing I want to mention, Ben, if you can go to the top of the watch list for me. I'm sorry to have you scroll around. When we put the max loss here, again, there's a more detailed version of the watch list. I guess I should point this way. More to the right, okay? And it includes your strike prices and your deltas and everything else there. Okay. So now you can see all the good. This is all the good stuff. Your max loss is still there. The reason I want to explain the max loss, Ben mentioned this earlier, it's the distance between your strike prices. In this first example, you can see 15 and 17.50. There's $2.50 between that spread. That's the share price that you're agreeing to own the shares if it finishes in between those prices, which means if it drops below 15, you're no longer taking the shares. You're going to take your max loss of $250, but you're not going to get assigned the shares, because if it kept falling to 14, 13, guess what? Now you own the shares at 17.50 and it's trading at 13. Now your max loss is 400. Now your loss is at $450. So you'd rather take the loss, cut bait, and stay on the put side of things. But what's important to know is, if you know anything about the deltas, okay, that 10 delta, that insurance policy, that hedge, you can almost, it's not an exact science, but you can think of that as a percentage, like the likeliness that this is going to happen. Okay. People see that max loss number and they get scared. They go, wait, I'm risking $250 just to make 52. Keep in mind that max loss, statistically speaking, only happens roughly 10% of the time. Okay. 9 out of 10 contracts, that max loss isn't happening. In fact, 70% of the time, okay, if we look at the 30 delta, that means there's only a 30% chance, statistically, okay, that stock is going to fall below that strike price, which means 7 out of 10 contracts, you're not even being assigned shares. You're staying above that strike price and you're collecting rent, best case scenario, and that's the beauty of this strategy. I needed to get that out for all my newer traders that might be in the room. It's important to know, because it's very overwhelming to look at this list. And it's also very easy to look at the top of this list and say, oh, let me go hunting for the best premium. Okay. The top stocks on this watch list are also the most risky. Okay.
Yep.
You can see that when you scroll to the right. They have the highest risk. If they're paying the highest premium, it's because they're the most volatile stocks. Okay. Somebody like my dad trades Amazon, Verizon, and Starbucks and Google at the bottom of this list. He'll make 0.5% on those till the day he dies. Anyway, needed to get that out. Let's look at some charts, because we're Bill, really appreciate the questions. If you have more, don't hesitate to ask, and use the chat feature in your account.
Agreed. Let's look at some charts here. So I'm going to pull up first Delta Airlines, ticker DAL. We're looking at this one because it's a lower barrier to entry at 37.5, 37.50 in terms of cash needed. And then we've got a bullish outlook, and we're looking at lower overall risk. And it looks like they recently reported earnings, so we don't have that to worry about. So I'm going to go ahead and pull up that chart. I head over to my Tradier account. I pull up, you could go to the research tab here, type in your symbol, DAL. What I like to do is I like to look at the 1 month chart just to get an idea of what's going on with the stock. So it looks like we were in a bit of a downtrend. Looks like there was some optimism heading towards earnings, and then that optimism was unfortunately crushed, it looks like, with this big drop on earnings day here. And it looks like we've been kind of sputtering out a little bit over the past couple of days. This isn't necessarily bad. It looks like there's a lot of consolidation at this level. I'll zoom in a little bit here. High volume, lots of consolidation here. We see some previous support line here around 38.50, we'll call it. And, a short-term outlook, a lot of people are probably looking for what's known as like a dead cat bounce, where huge drop in stock price, and then maybe a short pop-up just based on people getting in because the stock's at a discount now.
You say dead cat?
Dead cat bounce. Yeah, that's what it's known as.
They need a better name for that.
I didn't name it.
I wonder if this has anything to do with the door flying off of a plane. I don't know if that was Delta.
I think that would affect Boeing, not necessarily the airline.
Okay. Gotcha.
So Tradier also has this cool tool. It's a technical analysis tool whereby they take anywhere from like 20 to 30 different technical indicators, group them together, and then give you this cool looking gauge here that'll give you kind of an outlook on, strong sell, neutral buy, or strong buy. So what I like to do looking at this technical analysis tool on Tradier is I like to change this from 15 minutes to 1 week. And when we do that, we're looking more at neutral here. So PeakBot's indicating a little bit bullish. Tradier's indicating neutral. Again, if you're on the put side of the wheel, that is a neutral to bullish strategy. So the outlook looks pretty decent in my opinion. Again, I don't know if I'm going to be personally trading this, but considering that there's this large gap to fill here, it looks like there was some strong consolidation around this 38.50 level. Might not be a bad option for the coming week. It does look like pre-market we are below 38.50, 38.16. So something to watch potentially. Moving on to the next ticker to take a look at, the TQQQ. This is ETF mimicking market movements, mimicking the Qs. We're going to take a look again at the 1 month chart. Now we want to look at the TQs here. This was part of the top 10 most traded, most automated stocks on PeakBot last quarter. So we did just put together an analysis. We'll be releasing that shortly. But if you were trading the 10 most automated stocks on PeakBot last quarter, you would have made, what was it, Dillon, like 7.2% on the quarter?
7.3% quarterly. Yep.
Annualized, that's 29.2%. So that's pretty fantastic. And I'd like to think most of our traders saw success there because, again, that was the 10 most automated stocks that we were looking at and analyzing, which means most people were seeing those types of gains. So I'm looking at the TQs here. It looks like we've got, we started off the year kind of soft, really not looking good. But since then, we've kind of recovered. It's choppy, right? There's no real direction to this chart right now. So I would be cautious personally about this. Going down to our technical analysis tool, going to look at a week. It moves from strong buy to buy. So the overall outlook is still pretty bullish, it seems. Again, if you're on the put side, looks good. Even if you're on the call side now, if you're selling that call spread, you're gonna buy a call, which means you want the stock price to go up because you want the value of that call to increase. So
I'm trading it this week.
Awesome. I think I might be as well. Do your own due diligence. Be comfortable owning these in the case that you do get assigned, right? And more power to you. So the next stock I want to pull up is Marathon Digital Holdings. So big pop over the last several days with these Bitcoin spot ETFs coming into play. That was big news from the SEC last week. Of course, Marathon Digital Holdings having involvement in Bitcoin and crypto. That was big news for them. As a result, we saw the stock price jump up pretty dramatically and then come right back down pretty dramatically. Again, going back to our watch list, we know that Marathon is at the top for a reason. It's a very high risk, which means you'll get a higher reward for the amount of capital that you have to put up. But when we look at the other side of that, when we look at the chart, it doesn't look as friendly, right? I wouldn't want to be trading a chart like this. And when we look at the overall technical analysis outlook for Marathon, it does say buy, and that does coincide with our bullish indicator on PeakBot. But again, just due to the sensitivity of the stock to news and whatever's happening in the market, too risky for me personally. Dillon, I know it's too risky for you. We'll go over your rules in just a minute. If anybody watching has any stocks they want us to pull up, throw them in the chat. We'll pull them up. I'm going to go over one more and then hand it over to Dillon so he can show you guys how to automate all of this. And Bill, if you're still around, he'll show you where the hedge is. So I'm looking at AMD now. This is the last one. Now, I mentioned AMD previously, a little bit higher price stock. According to our watch list, it is in a bullish trend. Did not mean to do that. It is in a bullish trend, and it is lower risk per our risk factor. So if we look at the 1 month chart, again, the market at the beginning of the year dropped pretty dramatically, but we've been seeing nice recoveries. Same story here, so a bit choppy. But if we look at the past, what is this, the past week or so, we've been in this range of 144 to 149. So if we look at the fluctuation there, that's only a couple of percentage points. For me, I'm pretty comfortable with that. Let's see what technical analysis says here. It's saying buy, and there's actually only 2 sell signals. So if I were looking at that, I would kind of interpret that almost as more of a strong buy. So AMD, not a bad option. I might add that to my portfolio looking at this now. But all that said, this analysis is great, and you could definitely trade these strategies manually, specifically the vertical wheel. But why do that when you can have an automation do it for you? So Dillon, why don't you go ahead and take us through your automated portfolio? Tell us what you're adding this week, what you're removing, and tell the good people how they can do it too.
Awesome. So I'm going to share my screen here right now. The first thing I'm going to pull up is actually a tweet. This was what we were referring to earlier. So these are live results. Okay. Well, we're looking at Q4 of last year. So we pride ourselves on being one of the only platforms in this space, if not the only platform in the world of algo trading for options and equities, to share our full list of our traders' results. So here's the info. Last quarter, we returned a 7.3% return, as Ben mentioned. Annualized, that's 29.2% on the year. Okay. If you were trading these top 10 most traded stocks by our subscribers, okay, as well as people using their free trial.
Important note with that, these weren't handpicked. Like, we didn't pick these out. We just went off of what was traded the most, 10 most traded.
Yep. So these are top 10 most traded stocks by PeakBot and Traders. If you were to trade one contract on each of these, you would have needed roughly $29,000 in capital, cash needed. You would have earned $2,095. That's the net gain. So that's where we're getting our 7.3%. Now, you can see we earned over $4,700 in premiums, but we had significant losses that were realized along the way, over $2,600. Now,
and that's okay.
That's okay. I mean, you're still making 7.3% on the quarter. That's better than 99% of retail traders are going to make. There are people with their money sitting in a money market account that won't make that on the year. Okay. So, but the point is, it shouldn't be ignored. And Ben, correct me if you disagree, but these losses, these stocks are at the top of the watch list. Most of the time. Okay. Most of them. TQQ maybe more toward the middle. Everything else here is going to be found in the top 15 to 20 stocks, which again are the top 15 to 20 most volatile stocks. So we have the data. It's not showing here, but I'm pretty confident in saying that if these stocks, we were to look lower on the watch list, you wouldn't have as much realized losses because you're likely getting assigned less and the stocks are less volatile. So I just wanted to show that information. So, all right. Follow us on Twitter. Here is the at UsePeakBot. Here's our new, we still say new because it still feels so great and so new compared to our old layout. I always just love to flash the night mode versus the light mode. For demo's sake, I like to keep it on light mode, but I think a lot of people love this version. So here's my portfolio, and we're going to start doing this. In fact, today, Ben, I think I'll post my starting account, what it's at today, and I'm going to post it every day, if not definitely every week. We're going to be tracking this, and I want the people to know what I'm doing and how I'm reporting my results. So, So a couple things that we're keeping. All right. We're going to keep 3 of these stocks that are on here. AFRM, we're keeping. That's Affirm. We're also keeping Run, and we're keeping TQQQ. All right. So to provide some color here, I was assigned on AFRM. Of course, my internet, Ben, you seem to have no trouble getting this document loaded. I
preload everything before the show.
So did I, but I guess it was just taking too long. You know what? Let's take a look at the watch list in the app here. Hopefully that won't take as long. So with AFRM, I got assigned this past week. Okay. So with that, that means now I'm selling a call. Okay. And we're actually working on this. We're going to have the call data built into this watch list in the app very soon. Okay. Right now, this is only showing the put data. All right. Maybe this is loaded up now. Okay. So Affirm, I was assigned the shares. So it's still trading within my block. Okay. So if we come over here and take a look at everything, everybody who's watched this before knows that I like to stay between, in percentage earned on the week, I like to stay between 0.5% and 1.5%. Okay. Anything above 1.5%, not my cup of tea. I start thinking that that stock's a bit too volatile. Okay. So with the firm, I got assigned my strike prices this week. Of course, these are estimated. These could change based on the first 90 minutes of the market here. But I'm looking to get back above $42 in order to sell these shares. And I'm going to collect $95 in net premium this week for that contract. My current price is my current cost per share is $43.35. So I would end up selling these technically at a loss, but I'm okay with that because I'm collecting premium the whole way. All right. So some people are like,
case in point to what we just showed on our Twitter account, right? Like there are going to be losses along the way. Like there's always going to be losses when you're trading. Every successful trader will lose. But the game that we're playing is a longer term game here, right? Like we're not looking to hit a home run on a single trade. We're looking to hit a bunch of base hits. I mean, heck, we're looking to hit sacrifice flies, sacrifice bunts. Like we're just looking to move people around the bases here.
Yep, absolutely.
You stick with it, the results show that the premiums will outweigh the realized gains or losses. Sorry, I keep cutting you off.
That's okay. Normally it's me doing it to you. It's kind of refreshing. I'll give you shit for that later. So the numbers are, I've lost $236 on this position, right? Because I got assigned, the stock dipped. I'm down $236 on my Affirm Holdings position. But I know I'm going to make 95 of that back this week. And if it doesn't get back above 42, guess what? I'm collecting probably another $95 that could change, but another, another $95 next week. I'm already out of my hole, right? Or the stock recovers and it goes above and I can sell them at a higher price. So the point is, I'm keeping Affirm. Although I was assigned, let's go back home here. I'm also keeping, that's a little bug. We'll get rid of that. Also keeping Run and TQQs. So let's take a look at Run really quick. Sunrun, I was assigned. So we're looking over here. Okay. The stock is currently trading at 15.10. My strike price in order to get rid of those shares this week is 15.50. Okay. I am going to keep this running. I like the stock. I've been with it for a long time. I'm comfortable owning them, and I'm more comfortable collecting the premium, even though it is technically a high risk level. I like where we're at. And then TQQ, we looked at that earlier. It's trading at 50.34. My new strike price estimated this week is $51. I feel good enough about the market this week and the risk level and the trend to keep things running there. All right. So no changes on those three. The only change I'm making, as I mentioned this earlier, I got assigned on GPS. Okay. So now GPS, if I did a Control F search, is no longer on this watch list. Okay. And let me do this. GPS stock. Okay, so yes, it's Gap. I needed to make sure. So Gap is no longer on this watch list. Now, as we mentioned earlier, there's reason for that. It's either not paying a high enough premium, the stock isn't doing what we like for this watch list. So guess what? I got assigned. I'm taking a $76 hit, but I'm cutting bait. I'm manually selling the shares. I've gone into my broker account. I'm selling those shares this morning, and when the market opens here in 20 minutes, it'll try to sell those for me. And I'm putting my cash elsewhere. So what I'm going to do is I'm going to come here. I'm going to click on active. I'm going to remove Gap and save. Okay. So now that opens up capital for me to add another stock, which I am targeting JD.com right here. Okay. So actually, you know what? It's trending bearish. I don't think I'm going to do that. I overlooked that earlier. You got to make sure you're looking at everything here. So for right now, let's just go on the fly. I was looking at this earlier today, Carnival Corp. All right. So it's bullish. It's well within my range. I'm going to add CCL here, and I'll show you how. So you're going to click on Start New Automation. You're going to select the wheel strategy. You're going to type in CCL. Carnival will pop up. You'll enter your number of spreads that you'd like to sell. For this instance, I'd like to do one. That's $1,600 approximately that I'll need for my in my account in capital to execute this trade. I will activate that, and now I am ready to rock. So that's what I'm going to stick with this week. I might log off, and in the 18 minutes before the market opens, maybe I'll make a change on that if I take a look at something else. But the point is, I don't want to be overly emotional here. We want to eliminate that. Fear and greed is what ruins traders, okay? Let's stick to the strategy. If CCL fits everything that I'm looking for here, it's in my range for premium paid, it's bullish or neutral, which is great. And sure, it still has technically a high risk, but I think that's a lot of stocks this week. I'm rocking with it. I'm not going to think twice. I can afford it, and we're going to move forward. So, that's it. That's my portfolio for this week. If I make changes, I'll make an announcement. But yeah, that's how you do it. As again, you saw how easy it is to add and remove stocks from your portfolio.
Talk about the hedge for just a second.
Okay, the hedge. So let's say let's just choose CCL. You can click on the active button, and now this is where you can go and turn off your hedge. Okay, so we give you a warning. By turning this hedge off, you're exposing your positions to a greater loss potential. Please ensure you understand the implication of selling naked options before turning off this hedge. Okay, that's where you can turn it off. If I was to save this, you'll now notice that CCL is still running. It has one contract, but the hedge is now turned off. Okay, I'm going to turn it back on because I want to, because I can. I'd rather be more protected. The only upside, okay, and this might be bold, it's just my take, it's not financial advice, but the only upside of trading it unhedged, and this is if you know this stock like the back of your hand, is you're gonna earn more premium that week, right? Because you're not paying your insurance, you're not paying back a percentage of your premium, right?
And that also depends, because unhedged, we're selling the 25 delta. So if there's a large gap between the 30 delta and the 25 delta, there might not even really be that benefit.
Yep, that's true. So if we were to look at, maybe I should type in a different Carnival. I'm not so smooth this morning. Here's Carnival. So there's no, here, I'll find it over here. So we only have one strike price, which means the second that stock dips under $16 when the market closes, regardless of how far that falls, we are taking the shares. There's no floor now. There's no insurance. There's no hedge. So keep that in mind. I've done enough of hopefully not confusing the people here. We keep it simple. Stick to your strategy. This is a long-term plan. Again, as you can see, this really adds up over the course of a few months or even a year. So let us know if you have questions. Contact us anytime. This is the chat feature we were referring to. You can message us here. It rings to our whole team. You can enter your name and your email so we can locate your account, and you'll be taken care of. Anything I missed, Ben?
No, I think we're good. Again, short week, meaning less exposure. Less exposure equals less risk equals less reward. Expect premiums to be a bit lower this week than what we might see on average, but overall, we're looking pretty good going into earnings season.
Excellent. So, yeah, appreciate everybody tuning in. This was a bit of a longer show. You got 15 minutes till the market opens here. Go make any changes if you feel it's necessary. And best of luck out there. So, without further ado, we will sign off and
Hit that like button, subscribe, and yes, we will see you at the peak.
See you at the peak. Ben, I hate you today. See you at the peak. Take care, everybody.